Boy, oh boy, it's that time of day again here, folks. Time to get back to work. Hope you guys had a great day out there. Time to get back to business, though. Got a lot to talk about in tonight's video newsletter. It's Tuesday evening. It is October the 22nd, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, don't forget I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning at the opening bell in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys and gals find the best entries and exit points, find the best levels of support and resistance for tomorrow, and most importantly, help you avoid some common traps in tomorrow. That's Wednesday's trading session, and we have quite a bit to talk about here tonight. We'll grab the calendar first. Got a bunch of news coming out tomorrow. Got a big news report on the oil. We'll talk about that in a moment. Then we'll open up some charts. Got a lot to cover on the charts here, right? We got some big moves on the chart. We got some ranges, and of course, we're going to grab some oil. I got some S&P, some Nasdaq, and we'll wrap up tonight on that yellow metal, that mighty gold futures. I'm going to jump into oil first tonight. Oil, of course, showing its cards once again at the very end of the trading session. Let's grab that black gold, that Texas tea. Let's grab those oil futures. And let's get this newsletter underway here tonight. Jumping into oil here. First of all, what do we know on oil? We know the market had a big, nice, strong bull run up, right? Anytime we see a strong move in one direction, we always expect to see another leg, right? But that second leg, what did they do? They missed something. They didn't get a retest of the 93. They didn't get that measured move. And you can see it looks like these bears got a 1, 2, 3 reversal. And of course, what happens is, right, the bears mark up that low, mark up that high, and they're now coming in and selling it as we go. But wait a second. What happened? They didn't finish the job. Right? The bears never got the run back lower, and that's why I said at the very end of today's session, it looks like all the details have now come together. It's a range. This is very similar to what we saw in last night's newsletter, where the market went up, went down, went sideways, and kind of finished right in the really at this point, there's only one thing you can call this, right? It's definitely got a bit more bullishness than bearishness, that's for sure, right? We definitely have a little more bullishness, but lower highs, higher lows. Again, these buyers couldn't get their job done. The sellers had it on a silver platter up here, and they couldn't finish the job. That means we have a neutral market at this point now going into tomorrow's trading session. I've got this marked up as a range. You could also call this as a triangle. Bull bias into a triangle. What do we do with a triangle? What do we do with a range-bound market? We buy low, we sell high, we fade the breakouts, right? We buy low, we sell high, we avoid the middle. I'm also going to be keeping an eye out here for potential breakdown back to that 53.23 or a break up to retest that $55 a barrel. So how do we buy the low? How do we sell the high? And how do we know when it's safe to trade a breakout? We're going to talk about all those details tonight in this video newsletter. If you're an oil trader like we are in our trade room, make sure you stay tuned for the rest of this video. We're going to break that down into small bite-sized pieces. And of course, range, go away. The S&P and the Nasdaq here tonight are anything but range bound, as you can see, right? Well, we started off with a range here today, right? Real choppy range, right? Buyers were picking the bottoms here underneath that range, but sure enough, you can easily see here, right? Didn't take them very long, right? Nice strong move down. You can easily tell bears marked up those lows up to that high, and they sold it, right? That's what should have happened on the oil, right? The oil should have resulted in that big, strong move down. So we know the bears have control of this market at this point. We know the bears have all the momentum on their side, and you can easily see we're sitting right around that measured move. So we know we're bearish, but we also know we're sitting really at the low of this channel, right? We're sitting here at the measured move. I would say right now it's probably a little bit too low to start selling right now. Really what I want is I want a pullback, right? I want a pullback. I want to see a pullback so I can sell ideally up inside this battle zone. I've got 3 different patterns I'll be watching for on the pullback. And I'm not going to lie to you, right? You saw how far the Nasdaq went this afternoon. We've still got some room to go down to that 75 area, but as you can see, we're sitting right on top of that measured move right now. So as we go lower, I've got 3 different patterns, 3 different chart patterns I'll be looking for as we go lower. So we'll talk about those 3 patterns as we go lower, right? 3 patterns as we pull back. Heck, we'll even talk about what if we get some earnings and we get a reversal, right? What does a reversal look like and when can we buy it for a retest of that 30-14 area overhead? Got a lot to talk about here tonight on the S&P, so make sure you stick around for the E-mini. Speaking of strong moves, now of course the Nasdaq, right? Nasdaq of course got some earnings again, like I mentioned, right? So we had a bit of mixed earnings. I think Brexit really kind of stepped it up with that decline today. The Nasdaq is really where the S&P might be tomorrow. Right, the Nasdaq's all the way back down to retest that low. So Nasdaq's made one hell of a move lower, right? We know this is a trending market, definitely not a range-bound market. We know it's bearish, that's for sure. But then we see this really strong overshoot, okay? We have our channel. That channel's pretty easy to see. Right? That channel's pretty easy to see there. Doing a good job there, selling off the high of that channel. But now what do? Right? Now we kind of break free of that channel. That breakdown, right? That bear spike, as we call them, these will usually end up giving you 4 different types of patterns. Right? That bear spike down, there are kind of 4 things I look for after a bear spike down. The bottom line is we know we're bearish, that's for sure, but we also know we're sitting right on a major level of support. So at what point can I sell? Well, I can sell if I can get a pullback. And we'll talk about 3 patterns to look for on a pullback. I can sell if we get confirmation going lower, but what does that confirmation look like? We'll talk about kind of what I want to see, very similar to the S&P, right? So I want to be a seller here, but I don't want to sell all this way down, right? Way too low to be a seller. And who knows, markets that go this far in one day, some bad news sent it lower, some good news can send it right back higher, can't it? So we'll also talk about what a reversal might look like on the Nasdaq as well. If you're an NQ trader, you definitely want to stick around for this video tonight. And then over on the gold looks pretty confused right now. I'm going to go into a lot more detail on this, but gold is a range. It's a range inside of a range, inside of a range, inside of more ranges. We know we've got some bearishness to it. Right, the bears took it lower, as we mentioned last night. The buyers, I'll tell you, boy, they've had some great shots here. The buyers had a beautiful shot to grab it and run it higher. They failed there. They're getting another shot here right now to try it, going higher again. Will they be successful? We're going to wait and see what we get here on this. The bottom line, though, is we know we're bearish. The buyers have had a couple shots to be able to take back, right, that momentum, and they haven't been able to capitalize on them. We know we've got this range right in the middle. What does a range tell me to do? It tells me to sell high. It tells me to buy low. It tells me to avoid the middle. Absolutely. I want to sell high. Got some levels waiting overhead. I want to buy low. I've got some levels waiting underneath. I'm going to talk about my favorite entry patterns to buy low. We'll talk about my favorite entry setups to sell high. What would a breakout look like? How would we break higher here? Well, here's the deal, guys. Because we've got these ranges inside of ranges, we've really got to be careful with a potential breakout. I think we could easily get a breakout running higher, but then there's just as much possibility as coming right back down in. So there'll be some short-term opportunities on both sides of this, I'll bet, tomorrow. We're going to talk a lot more about how to time the breakout, how to do it correctly, and when to buy low, when to sell high, and when to qualify those breakout. So we got a lot to talk about tonight on that yellow metal. You're going to want to stay tuned on the gold here. So gold's range bound. Nasdaq and the S&P got a whooping on them today. Right, we'll talk about 4 scenarios on the S&P and the Nasdaq. And of course, we got that oil, that black gold, that Texas tea sitting right there in the middle of that range around 52 and a quarter. Now, before we break this down tonight, before we break all the charts down and talk about the specific entry setups we're looking for, I want to encourage you to make sure you join our mailing list. You may not be aware of this, but right before I publish our video on our YouTube channel every evening, I send out an email to everybody on our mailing list, and I want to make sure you get that email. That way you know every evening when it's time to get that nightly newsletter going. So it's very, very easy to join our mailing list. All I need is your name, your email address. Hit that subscribe now button. And then don't forget, when you subscribe to join the mailing list, your job ain't over yet, guys, right? Your job's not over yet. You still got to go in and check your email, because I'm going to send you a welcome email. And inside that welcome email, there's going to be a bunch of great free resources in there for you, so that way you and I can get the most out of our time together every evening. But most importantly, inside that welcome email is a verification link. You've got to go in, hit that verification link, so I can keep sending you those emails every evening when our nightly newsletter goes live. So don't delay, join the mailing list. That way you never miss another great lesson and another great opportunity to learn and earn on this video newsletter. Then how about questions, right? I know a lot of you folks are here for the first time right now. So if you're here for the first time, if you got questions for me, charts, data, indicators, whatever questions you might have, drop those questions in the comment section below. Always appreciate your feedback as well. What do you love about the newsletter? What do you hate about the newsletter? If you were in charge over here, if you wrote the script on this newsletter every evening, what would you do more of? What would you do less of? Do you hate my corny trading jokes? Let me know. I want to know what you guys love and what you hate. I promise I won't take anything personally. I'm always trying to get better and make this video more effective for you. How can I make this video the very best it can be for you and your trading? Drop me some comments. Give me some feedback. Ask me some questions down in the comment section below. And one more thing too, when you're down in the comment section below, do me a big favor. If you tune in every evening on this video newsletter, hit that thumbs up button for me, will ya? Because believe it or not, every time you hit the thumbs up button, YouTube helps to expose this video to other traders who are dying to learn this methodology as well. So help me share the love out there in YouTube land. Hit that thumbs up button for me. Subscribe to our channel. Post those questions in the comment section below. And one last thing too. If the comment section isn't quite your thing, or maybe you've got a more serious question that you want to talk to me about, I'm always here, available 24/7, 365 on that toll-free phone number. So please don't be afraid to pick up the phone. I promise I'm not a real scary guy. I promise I'll be nice and easy to work with. Call the office. I promise no call centers or chat bots, or you know what I mean, right? A lot of websites these days are all these automated computer systems now. I'm old school. I've been doing this almost 15 years. I started School of Trade almost 15 years ago now, before they had all this complicated technology. I'm old school. I love talking to you guys. We're always here in the office to help answer your questions. So call me in the office, especially if you need any help getting access to our free trading classes or getting your free pass to attend our trade room as a guest. So don't be afraid to call that toll-free phone number. Use that live support tool in the upper right-hand corner. But let's get this thing moving forward, though, here in the meantime. You guys call me if you have any questions. Let's take a look at the schedule here for tomorrow. Tomorrow is a Wednesday, hump day tomorrow morning, October the 23rd. Now, as I've told you guys a couple times already this week, we've got earnings coming out this week before the market opens and after the market closes. So be aware, that's what's leading to a little bit of this, up and down before we get to our charts here each morning. So if you're in Asia, if you're in London, just be aware, right? It's going to be a little bit choppy as we get to the rest of this week and next week into the end of this month, which will ultimately complete what's called earning season. So this week and next week, right, will be a lot of earnings after hours. So be careful trading the after hours session. As we look at tomorrow's in-session news, everything's pretty much pointed to that petroleum status report. That's the only major news we have on the schedule. Now be aware, this only applies to oil traders, keep in mind. I always try to sit on hands after 10 o'clock Eastern time on a Wednesday morning. And then usually about 10:40, we usually pick up where we left off because the dust will have settled after that 10:30 news. Now, you're more than welcome to try to find setups after 10 o'clock. But in my experience, the oil futures market, remember this is the petroleum status report that will affect oil tomorrow. It won't affect gold or the E-minis, just the oil market tomorrow. But in my experience, after 10 o'clock, you can definitely tell professionals start to get out of positions, protect themselves ahead of that news report. So the moral of the story is be careful after 10 o'clock. You can trade all the way into it, but just be aware, you're probably not going to get very good price action. And oftentimes it's very, very slow, as of 10:15, 10:20, 10:30. So I always warn my clients after 10 o'clock, you really got to have a good reason to be trading oil. Let the dust settle around 10:40 Eastern time. The news comes out at 10:30. You should be able to get back on the horse and start looking for more setups. Now, there's also been a lot of stuff going on here in the news here this week, right? We heard from Brexit today, right? There was I won't kind of bore you with all the details, but there has been a little bit of hoopla around Brexit right now. That's kind of a known unknown for this week. We're starting to hear some rumors regarding that U.S.-China trade talk, the trade deal. If you recall, a couple Fridays ago, the trade deal was specifying that China would buy the agricultural stuff, and that was kind of the big deal about it. It looks like there might be some confusion on that, so we may see some more, right, for that tomorrow. And again, right, the earnings reports, right? Earnings are definitely going to be, again, these are kind of the known unknowns of how they're going to affect us tomorrow. Now, I'd be lying to you if I said I know exactly what's going to happen with all these known unknowns tomorrow, but what I will be doing is keeping my eyes and ears open for reactions on the chart. Okay, that is the most important thing. It's very tempting when you get a lot of news stuff going on. It's very tempting to be tuned into CNBC and watching all the news feeds. But you've got to remember your best resource is that chart. That chart will tell you direction, it'll tell you location, it'll tell you momentum, entries, exits, right? The news is just a noise. All right, so don't let the news media fool you into thinking you got to be tuned in 24/7 for that next announcement. By the time it hits CNBC, your chart's already told you what to do next. So save yourself the stress, save yourself the anxiety, right? Save yourself the back and forth roller coaster. Turn off the television. Don't worry about the headlines. Be aware there are some known unknowns out there, but also be aware the biggest asset you have, the biggest resource you have right now is watching that chart. So stay disciplined. And speaking of discipline, right, that is my job every morning in our trade room, right? That's what we do together every morning. I make sure to keep the blinders on with all of my clients every morning at the opening bell. 8 o'clock Eastern time, we open up our trade room every morning, Monday through Friday. We grab some oil, S&P, Nasdaq, and some gold. Let's grab a look at the oil market first. As we mentioned in the introduction, oil is bullish overall into really what is just a trading range, right? We're bullish overall. The buyers didn't get their measured move. The sellers completely fell flat on their faces, and so we can definitely tell this market here is kind of sitting here sideways in a range-bound market. I want to mark up the range itself. I'm going to use that range to find my sell zones above, find my buy zones below, and my goal is to buy low, sell high, and of course avoid the middle. So we know where those levels are. How do we buy low and sell high? Well, there are two basic patterns that you want to think of. One is a failure pattern, and the other is a variation of that failure, which is called a nested failure. Now, how do you know know which pattern to use, it's all boils down to momentum, right? For example, right now, market is overall bullish on this chart. And again, right, I would say the market will turn bearish if they would have got that run lower, right? If they would have had that strong run lower there, that would have confirmed that 1, 2, 3 reversal. And this thing would have already been pulling a NASDAQ right now, right? We'd be selling off that high if they would have completed that mission going lower. So again, we know there was potential for the bears to grab it, but they didn't do it. They didn't get it, right? If they would have, this chart would look just like the S&P and the Nasdaq. So we don't want to be a buyer, right? I want to be a buyer, being a buyer underneath this trading range. And really the easiest way to be a buyer underneath the range is to look for a failure pattern. So as we try to go lower now, what I'll wait for is I'll wait for sellers to try to sell that pullback. And once I see those bears, right, committing off that pullback, now I know where their stops are. Most importantly, what stops, right? That's where the pain starts. Okay, that's where the sellers become buyers, isn't it? So that's why I look for a failure. I wait for that break outside the range where I know buyers are trying to buy it back up. I wait for sellers now, right, counter trend or breakout sellers to try to sell off the moving average pullback. It'll be just like this, right, but the opposite direction. Right? Buyers go up, the buyers try to buy off the pullback, they fail, and we sell it back down in, right? Same basic idea. We run lower, the sellers try to sell off the pullback, and we're looking to be a buyer now going back up into that range. Sometimes we get lucky and we get a failure pattern into a pullback pattern as kind of a combination. Now, what you want to remember is in this one, you want to make sure you're getting in underneath that range. So the failure pattern is almost a certainty. Almost. There's never anything really certain in trading. Okay, so failure pattern is pretty easy to get underneath the range. It's the pullback pattern sometimes that just gets you in a little too close to that trading range, right? So you wouldn't want to take the pullback if it happens inside the range. We'll talk more about that obviously tomorrow as we're watching these setups in real time. So that's the idea, to buy underneath it. Now, how do you sell overhead? Well, remember, we're bullish. So for me to be a seller now, I'm going to look for a slightly different type of failure. I still want to get that break up. I still want that moving average coming over. But now, because the buyers have more of a control over this market, they're not going to give up as easily. So I've got to anticipate that, let them try not just once, but try twice. And once I see those buyers trying once and trying twice, and notice, guys and gals, notice how I draw that lower low. Right? We go up. The buyers try once. The buyers try twice. Lower low. 1 and 2. Then fail back down in. Same idea. Okay? So that's the same type of pattern now. We're looking to be a seller off of these, right? Off of these highs. So a quick recap on this, right? It's a seller failure into a pullback combination. Again, selling off the moving average, those sellers failing into a pullback combination. Or it's it's called a nested, right? Nested failure, as in two failures, right? Failure inside a failure and then back down in. And you can see an example: 1, lower low, 2, and back down in. Again, trying to sell into those stop losses of the buyers in that case. Now, what if we break out? What's a breakout look like? Breakouts. 1, 2, 3 breakout. 1, 2, 3 breakout. What does that look like though? 1, strong move down. 2, pull back to the moving average. 3, strong move off. Remember, we almost had that back here, right? Strong move down, pull back. Show me you mean it. Show me some strength. They didn't get it. That's why it's a range. So now we know it's a range. We've got to go through it. 1, strong move down. 2, pull back to the moving average. 3, strong move off the moving average. Now, we don't have to have a real strong move. I mean, you want to be obvious, nice and strong, but really what you really need is you need that pullback to jump off the moving average. You need those bears to take full control off that moving average. Okay, don't be foolish and try selling that pullback, right? Because we're not a bear market yet. But once we do get that new lower low with a 1, 2, 3 breakout, then mark that low, find that new hidden channel, Now you know that initial low, top of the channel, that's going to give us now, that's going to give us now that what I call 1, 2, 3 breakout into a hidden channel pullback. Now my target on the low side, the sell side, is at 53.23, but let's be honest. I mean, we got inventories tomorrow. This could easily go even a little bit lower here. You got 52.85 down there, and really, right, the kind of the rock bottom of this move is down around, as you can see here, right, down around that 52.60 area. So it wouldn't be very far-fetched, as you can see here. It wouldn't be totally insane to go 1, 2, 3, get that hidden channel, sell off that high, and leave that runner, all the way down to that rock bottom low. We will focus, obviously, on getting in because we can't control everything else, right? We'll focus on what we can control, right? Control what you can control. Now, as we go higher, this will be a little bit more difficult because you'll notice as we go higher here, what do we have overhead? We've got a big top overhead, right? There's a lot of resistance up here overhead. Now, if we can get above 55, well, then we've got we got a big wide open chunk until 56.64 and change up there. So there's plenty of space if we can get through 55, but getting through 55 may prove to be a lot more challenging than getting back down to 53 or 52. So 53, 52 might be pretty easy here for these bears, but how do we trade this going higher here? Well, there's a couple things you want to think about. One would be this. This is kind of honestly what I'm looking at for tomorrow. As we go higher, a 1, 2, 3 breakout is not going to put us in a very good spot to be a buyer. So honestly, if we can get a market going higher here, if we run all the way up to that measured move, we're still up around that big round number. We're still up around that major resistance. At that point, I can't buy it. So the only other option would be a crown reversal. 1 try for the bulls, 2 try for the bulls, trap high, and back down we go. So unless we can just blow right through that 55, I'm going to look for a slightly more conservative, and conservative for good reason, reversal pattern. Okay, so now imagine we try to make a run for it. We run to that measured move. Let those buyers buy 1 pullback, lower low, 2 pullbacks. You'll notice this one, trap high. This one's called a crown reversal pattern, and it's used for reversals. In fact, you can see that right here, right? We go up, there's 1, there's 2. Now, you didn't need a crown reversal on that, but it definitely didn't hurt. Okay, that's a lot more reliable variation of that nested failure. I call it a crown reversal, a little crown on top there. Okay, now what would a breakout really look like? How could we buy this? It'd have to be a 1, 2, 3 and really run, right? It would. It'd have to be very, very strong up here, or you'd have to kind of play with fire on this and go up with a 1, 2 and go a trap low on a 2-try breakout pattern. But I mean, that's going to be uber aggressive, right? That's really, really aggressive because at that point, you're buying the high of the range, the high of that, right? The high of the 54.93, the measured move up there. So just be aware, you may see a shot there for a 2-try breakout pattern, as we talked about many times on this newsletter, but it's just a really aggressive spot there. So make sure you wear a helmet and your mouth guard, right? And make sure you tell your spouse where you are when you take that trade. Anyways, what would a breakout look like? Yeah, 1, 2, 3, really show me some strength, right? I mean, we're going to have to see a real strong breakthrough here to be comfortable buying right above that high. 1, 2, 3 breakout. I'm not saying it can't be done. I'm just saying we're going to need to see a dramatic run higher here for us to be confident being a buyer as we go higher. So as you can tell here right now, looking at buy low, that failure into pullback combination, and really overhead here, that failure back in, that crown reversal back in, right? Or that breakout either up or down as we've outlined so far. Boy, we've covered a lot in this first chart. Now, I want to give you a lot more information on this entire strategy, but I got to keep going right now. So here's what I'll do. If you want to get a deeper dive into all the patterns I've talked about, into the entire strategy that we use in our trade room, what I'll do is I'll put a link up here for our free trading classes. Okay, grab that link in the upper right-hand corner. If you're on the blog at Sideways Markets, I'll put a link right below the video tonight on the trading blog. There'll be a big red button right below the video tonight on the blog. So grab that link in the upper right-hand corner. It's also linked up in the description of the YouTube video. And get registered for our free trading classes because you'll learn all about my 3-step strategy, my 4 favorite entry setups, and most importantly, you'll see examples of how we use these setups on our favorite markets, right? And that way you can get to see what these patterns look like on a real chart. Okay, so grab that free course. In the meantime, though, let's keep this party rolling here. How about some S&P? Boy, the S&P is pretty obviously bearish, as I mentioned earlier. No doubt about that, right? They clearly got that strong move down. And, with that strong move down, it looks like everyone marked up those lows, waited for that high, and just sold it, right, as it came back to that high. So we know we're bearish. We also know it's a very strong spike as we go lower. And really, let's be honest, I want to be a seller on this. And the ideal scenario here would be we get a pullback. And, with these types of pullbacks, with these types of markets, we oftentimes see kind of one of 2 types of pullbacks. Either one would be, I'm going to get rid of this measured move there real quick. One would be a 2-legged pullback, 1, 2, and then up. These are pretty common. These are pretty common in these big kind of spike moves lower here. What you want to do in that situation is mark up that trend line, get underneath it, and use it now as key resistance. We call these 2-legged pullback patterns, or 2LP for short. So again, we know it's a very, very strong move down. Ideally, let's paint the ideal picture here. The ideal picture is we get that pullback. Okay, sometimes the market goes 1 leg, pulls back a little bit, 2 legs. I can draw a trend line up off that low and then use that trend line now, use that trend line to sell underneath the trend line. Okay, that'll put us up inside that sell zone. That'll allow us to risk small, to earn large, targets back down to retest that low. Okay, that's one option. The other option would be what we saw back here, right? Where it's a straight line up. We get above the moving average. And ideally what you want is you want to see a nice big pop higher. I've got some levels over here I'm watching, you'll notice, right? I call these reversal lines. This is a prior swing low that I can mark up here and use as a level of resistance. So that's my go-to area. Imagine now the moving average comes over. We go up, right? Get into that sell zone. At this point now, I'm sure a lot of buyers here will think, okay, I guess we're going to reverse, and they'll try to buy that pullback. Okay, I used to make that mistake all the time. I would see a market reach an objective or a measured move like this, and then when you see a strong move up, it's very common for a rookie trader to say, oh, they reversed it. See, they went too far. They got their measured move. Okay, I guess now we're going back to retest the other side. The problem is, though, the market hasn't turned bullish yet, has it? It hasn't. Right? The market is just simply pulling back for profit. Once those buyers commit now and they try to buy off that pullback, right? Once those buyers now show us they're dreaming of that short covering rally, now we know exactly where their pain is. Now we know exactly where their stops are. Now we know where those buyers now will become sellers. And we can look for that failure into that pullback combination, right? That failure into that pullback combination, and we can run it back down again to retest that low. So that in all reality really is kind of the perfect scenario. Now, what I would expect here though is with all of this strength going lower, I would honestly expect these 2 scenarios. Either one is going to be a range down here. Okay, if I had to guess right now, I would guess that's what we're going to get. We're going to get some sort of range. Now, this range might be here. It might be a little bit lower. But the reality is I would expect here that with all this movement down, I will say, though, there's still plenty of room to go. So it could keep going lower, and we'll talk about that in a moment here. But I would expect that we're going to get some sort of range here, right? I would expect some sort of range. Nobody's going to want to sell this market. It's too low to sell. But nobody will dare take and buy this thing either. So it'll start going sideways here. Now, what do we do with a range? Well, it's bear bias, obviously. So we want to sell. Where do we sell? we take the size of that range, which I don't know enough about yet, and we find our range expansions. Okay, we just talked about this on the oil. What are those range expansions levels? Those are resistance, aren't they? Yep. And so what we'll do is we're going to use those range expansion levels in combination with a 2-try failure pattern. What's that look like? Well, first of all, I want to see a profit-taking rally. Then that will bring the moving average up, and we can now look for the buyers now, right, the counter trend buyers, to try a second time. Okay, I call this a 2-try failure pattern. Whenever I have a range-bound market, I always know buy low, sell high, and focus on failures. Okay, my favorite way to do that is to mark up my range, find the range expansion level overhead, create that resistance, and then wait for, in this case, the buyers to try once, get outside the range, buyers try twice. And the reason why we call it a 2-try breakout failure or 2-try failure pattern is because you want there to be 2 very clear tries, okay? You don't want to be kind of clumping together 2 small tries. You want to make sure you get 2 real obvious tries there. And again, like I mentioned earlier, that's a good example. You may not know what I'm talking about with that, but when you take that free course, in the upper right-hand corner, you'll learn a lot more about what I mean by a 2-try failure. So that is definitely something that we are watching here for tomorrow on the S&P. Now, if we keep going lower, watch if we grind lower here, right? Because we may grind lower. And if we grind lower, that will turn into a spike in channel. Okay, spike in channels are also very common after we get those strong spikes down like this. Now, what do we know about a spike in channel? Wait for the pullback. Wait for the pullback. Well, let's say it this way. If you're in Asia, right, or early in London, and you see the market running lower here now with a lower low, you can mark up that low, mark up that high. If you get to it early enough, you can sell off that high. Okay, so again, as we go lower, you're now watching for, let's get rid of this channel here for a moment, right? While you're going lower, you're watching for that lower low. You get that lower low, you draw the trend line. Bring it now up to that high, and now you can look for that sell coming off that high. Okay, that will be one of the early opportunities to sell this market. But again, you've got to see it keep going, pull back, and run, right? Keep going lower. Mark that low, mark that high. We're looking to sell now off of that high. Okay, now again, that's got to be early in the move. You're not going to want to do that as it goes further and further down, right? You don't want to try to do that on these 4th and 5th tests. If you can get to it early enough, you can get that sell off the top of that channel. If you don't get to it early enough, if you're in Europe or you're in the US like I am, what you then want to do is mark up those highs and look for that failure into pullback combination later on in the process. So imagine now, let's mark up that high and that high. Let's do this actually. Let's make that a little orange there. Okay, so there's our new spike in channel, right? We pop up now into our swing highs now. The moving average comes over. The buyers now try to buy it because they think this thing is reversing now. What happens a lot of times with the spike in channel is you get these profit-taking rallies, right? Because we haven't seen a deep pullback yet. And the buyers in this case, they confuse that profit-taking rally with a reversal. And they come in, they try to buy that. They try to buy it now going back up again. The problem is it's way too bearish to be a buyer. So smart traders, they're going to slip their orders in right below that low, and they're going to sell right into those buyer stop losses, right? Those counter trend buyer stop losses. So again, on a spike in channel, if you can get to it early enough, you can sell the high of that channel. But honestly, if you don't get to it early, you don't want to try to chase after it later in the session tomorrow. You want to wait for that pop and then sell it as those buyers try and fail to reverse that trend. All right, guys. Now, where would these bears be trying to go at that point? They're trying to go down to that 29.75, right? That's the big low of that move. So bears, right, they want to get the 1, 2, 3 down, mark up that low, mark up that high, and sell off of it. You can get in early. Remember, get early off that high. If not, if you can't get in early, wait for that pop and sell the pop later on in the process. Again, I will not be surprised whatsoever if this market starts going sideways at some point down here. So watch out for that sideways range. 1 try, 2 try, failure pattern. All right, so what does a reversal look like? How would a market reverse? On strength, a lot of strength. We need that 1, 2, 3, don't we? So we're going to need to go 1, strong move up, 2, pull back to the moving average. And keep in mind, if that pullback fails, you're going to have everybody piling on here right now, getting short right off that failure. That'll be a very attractive failure pattern for those sellers. If they can hold this thing though, and keep in mind, this is not drawn to scale, right? But if they can hold that jump off the moving average, well, now you can mark up that high, mark up that low, find your sweet spot, and now you know what you're looking for, that 1, 2, 3 reversal into a hidden channel pullback. Where's my target? Yeah, target's easy. Back up to retest those highs from there. So pretty easy, right? Pretty easy idea there on the Emini S&P. Just don't force it. Okay, there's no such thing as this market's quote-unquote gone too far. Okay, this market has not gone too far, because if it's looking at the Nasdaq right now, the Nasdaq, check the Nasdaq out. The Nasdaq, of course, went even further. Okay, and don't forget, guys, again, as I mentioned earlier, right, that free course has a lot more details of all of these specific entry patterns. So here we are on the Nasdaq now. Right, the Nasdaq is kind of the potential future tomorrow for the S&P 500. So the S&P would love to be back down to its major low. The Nasdaq's already there. Okay, what do we know about the Nasdaq right now? We know we're bearish. Yeah, that's for sure. Right, definitely not a bull market, and definitely not a range market. What else do we know? Strong spike down. Right, strong spike down. So again, a lot like on oil. Sorry, a lot like on the S&P, we'd love to get this thing to go up and sell it back down. But in all reality, what's more likely here is a range, especially since we've already reached this kind of major low right now. So a range is highly, highly likely, or that continuation, and we can sell from there. Where are they trying to go there? The next big level lower, 78.07. But if you look left a little more, though, you'll notice you've got a range down here. And this range is going to be a big old magnet down around that 7,700 area there. So, again, we got plenty of space here to go lower. But for now, though, we've got to get through this major level here. We got to get through this major low here on that NASDAQ. So as we look now at this chart, a little more detail here zooming in for us here. All right, so think about the pullback first. Okay, one variation of that pullback will be a 1 2-legged pullback. Mark up that high, or mark up that trend line, get underneath that trend line, and use that trend line, of course, as that level of resistance. That's one easy way to look at it, right? Okay, 2-legged pullback pattern there. Or we go up. The buyers, of course, now feel like we've gone too far, whatever the case may be. They try to buy now off the moving average. Those poor buyers, it's not a bull market. It might be, right? If they can keep it going, hey, if they can keep it going, more power to them. Absolutely. But I'm not going to buy that pullback. No way. There'll be a lot of sellers here just drooling over the ability to sell into those buyer stop losses, and then hopefully we get lucky at that pullback. Okay, we may not get that pullback, or the failure pattern is almost a certainty in most situations. The pullback pattern is it's kind of the variable. We don't really know if we're going to get that pullback pattern or not. Sometimes it fails, okay? Sometimes it fails and just collapses, and you never get the pullback pattern, right? So all you're getting is that failure. So those are two patterns to watch for here on this NASDAQ for the pullback. One is that 2-legged pullback, up and underneath and use it. The other, of course, is that just straight failure pattern up above that moving average, failure into pullback combination for that target going back down to retest that low. Now, again, don't forget, keep your eyes open for a range here on the NQ. Strong move down. If we start going sideways here, okay, you know it's a range now. Once you know there's a range, take the size of that range, find that key level of resistance overhead. And then what do we do at that level? We use that 2-try failure. 1 try for the bulls, pull back. 2 try for the bulls. Again, I say 2 tries because I want you to visualize 2 separate tries. Okay, you want those to be very pronounced and easy to see. It's a range-bound market at that point, so you're waiting for that breakout. You're waiting for those buyers to try to buy that breakout pullback. As I always tell you guys, breakouts are highly unreliable, and rookie traders love those breakout pullbacks, right? That breakout pullback. I mean, I spent a good couple years trying to figure out how to filter a successful breakout pullback. Most breakout pullbacks, especially a counter trend breakout pullback, most of them are going to fail. And so we want to make sure we're selling into their failure, not trying to be a buyer because of whatever random indicator is firing off long. Way too bearish. As we go lower here, this is where we're going to really have to flex our muscles here for these bears. We've got a strong move down. We're going to want to see a pullback and a very strong run through. This is going to have to be one of those blow your hair back, very strong runs lower. That will give us the green light now. We can mark up that low, mark up that high. This becomes a spike in channel. Spike into a channel, which means now we can sell off the top of that channel. Right? Sell the top of that channel. And when you think about the sell off the top of that channel, if you imagine kind of a moment here, if you were to zoom in on that area here, think of it like a failure into a pullback combination off the top of that channel, right? So when I say sell the top of that channel, imagine you're kind of blowing up that area right there, right? It's a failure off the high into that pullback. Same pattern, same combination pattern we've talked about here so far. All right. Also, again, too, if we go lower, and let's say again you're in the U.S. and you can't get to this until we're way down here now. If you can't get to it until you're way down here now you want to wait for that pop. Now we're too low to sell it down here. Okay, so now you want to mark up these highs. Wait for that. Again, it'll be profit taking, right? It's a profit taking pop. Price gets above the moving average. Buyers try to buy it. You know the drill. And we're selling into those failures. And again, I'm just simply drawing up the screen right now hundreds of examples of how we apply these same patterns to our favorite markets as part of that free trading class. Last but not least here, what's a reversal look like? Strength with a capital S. Strength. Strong move up. It's not enough just to get a strong move up. We've got to get pulled back to the moving average and jump. Now, it doesn't be that exaggerated, right? But it's going to be a pretty good jump off that moving average. Once we get that jump off the moving average, what that really tells you is the sellers have given up control. The buyers now have it. Mark up that high, mark up that low. Now we know where our sweet spot is, and we're buying off of that low. And again, when I talk about buying off that low, what you're really kind of doing here is you got your channel there. It's that failure into pullback combination, right? That failure into pullback combination. So imagine when you get that hidden channel there, it's that failure into pullback combination, into strength, into traps. And you'll learn all about those patterns in that trading course. All right, guys, watch out for that range on the Nasdaq. Should be a range. We'll see here, and we'll play it by ear as we go forward here into the U.S. Session tomorrow morning. How about some gold? Gold's a bit tricky. Gold's definitely the one here today that you can definitely tell gold is confused. I think the most important thing right now, though, is I want to make sure I point out here to you that gold is ultimately inside of one big range, right? So let's go to a bird's eye view. Okay, don't worry about the time frame. This is a 60-minute chart. But the most important kind of thing I want to make sure I show you right now is that really on gold right now, we're all coiled up, right? Whether you want to call that the triangle or that the triangle, it's one big range. So even though we might get some breakouts here and there, really what goes down will probably come right back up. What goes up will probably come back down. So just be aware of that, as we kind of zoom in on this little area right here. Then the big picture, we're very much a range-bound market. Okay, so the kind of the moral of the story is that if we do see a breakout, we got to make sure we're getting to it quickly, because if you wait too long, you're going to probably end up holding the bag. Kind of like musical chairs where the music stops, and if there's no chair left, you're out. That's what will happen a lot in these types of markets, because we know, even if I zoom out here, right? Even if I zoom out here right now, I can see trend line coming up, trend line coming down, right? So even if we break out of this range, we're still going to find ourselves back around that high, okay? Even if we break out of the range, we're still going to find ourselves below that low. So we really got to focus on just buying low and selling high right now. That's going to be my goal here for probably the rest of the week here until we can see this gold market start to kind of shape up a little bit. And again, it's earnings season right now, so that makes a lot of sense why. And Brexit. Brexit's a big deal. That is definitely weighing on just the personality of gold right now. But, as I always remind you guys, right, news is noise. Trade the chart, right? Trade the chart. What is the chart telling us right now? We had that strong move down. Okay, now we thought this thing was going to go right back up to retest those highs, but they couldn't get it done. The buyers had a great shot too. The buyers had everything they needed there. Strong push up, just couldn't get it. They couldn't run off that pullback, and the market sinks back down in. They're trying again. You can see they're trying again. We'll see if they're successful or not, though. So we know the market's bearish. We know we pretty much finished the session just kind of chopping around sideways here. Here's the reality. I don't see any evidence that the buyers have taken control. Do you? I don't see any evidence of that. Now, you might argue with me about the range, but I know one thing for sure: we're bearish here, right? There's no reason to call this a bull market. So knowing that it's a bear market with a range, whether you want to call this an expanding triangle, I've got it on as a rectangle right in the middle. I do think that rectangle fits pretty well. I've got my range. That tells me now where my sell zones are. That tells me now where my buy zones are. You'll notice I've got double the buy zones, double the sell zones, and that is because the range is so narrow. Anytime the range is narrow, you're probably going to want to use 2 or 3 of those range expansions. We'll talk more about that, obviously, in our classroom sessions. So the bottom line is we know we're range bound. We're trying to get outside that range. What do we do in a range? We buy low, we sell high, right? I want to sell high here right now. How do we sell above a range with a bear bias? We look for that 1 try, that 2 try, and that failure back down, right? That failure back down. Now, we may see this trend line up here. Let's say, for example, we make a run here in Asia, right? Make a nice run, and we start touching the top of that channel right there. Okay, how do I sell it then? At that point now, it'll be pretty obvious these bulls are growing some legs, as they say, right? So instead of just being an aggressive seller, I'll wait for the nested, the 1 try, the 2 try, and we'll sell down from there. So again, if we just pull back here to the moving average, I'm going to look for those buyers to try and look to sell into their failure. But if we do see a nice strong run higher here as we go, I'm going to have to be a little more conservative on it, and I'll wait for the 1, the 2, and then back down we go from there. Same thing is true as we go lower here, right? As we go lower. Now, let's think about this for a second, because as we go lower, we know where to sell off the highs, right? Failure patterns off the highs. What if we go lower? Well, first of all, if we go lower here and we sit back inside that range, that's going to pretty much absorb all momentum right now, which means I should be able to use a 1 try, a 2 try, and a failure going back up into that range again. Okay? The key here is if we go back and we sit inside that trading range. What if we don't? What if it just slices right on through? Well, now it's way too bearish to be very aggressive, right? I'm going to be conservative if it really runs lower. So what I'll do is I'll wait for them to try once. I'll wait for now, try twice. You got it. And then we'll look to buy back up into that trading range. What's that pattern called again? That pattern's called a nested failure pattern, right? A nested failure. So again, just to recap, if we get back into that range and we start going sideways inside that range, that just like a dry sponge, it mops up all the momentum. And now with that moving average flat, I can now wait for that breakdown. I can look for that move lower. I can look for that breakout pull back, and I can buy into their failure. Okay, same thing as we go lower. I still want to be a buyer down here, but if we don't stall out inside that range, I now have to assume those bears are not going to give up on a fight. One try, two try, and then we can buy back up from there. So really, like every range-bound market, I want to buy low, I want to sell high, but again, it all depends on the short-term momentum in the market that we're getting. Now, let's talk about a breakout here right now, because like I mentioned, it's going to be a little bit of musical chairs here, a little bit of hot potato when it comes to a breakout. Now, the obvious breakout here is going higher. We had that range from last weekend. We had the big round number up there. And, in all reality, there's a big trend line here. There's a big trend line here. So it wouldn't surprise us if this thing rotated all the way back up into that big round number, right? I mean, after all, this is just one big range, as I mentioned earlier. So as we try to go higher, it's going to be all about timing on this. Let's say, for example, we get a 1, 2, 3 breakout. Okay, 1, 2, 3 breakout. Hold that pullback. Hold that pullback, and we get that breakout from there. If we get that breakout now what you want to do is mark up that high. Nothing's new here, right? Nothing new here. Mark up that high. Mark up that low. Find your sweet spot, and we're buying that pullback. Okay, the moral of the story now, though, is you got to get it early. You've got to get it early. You've got to get that 1, 2, 3, that strong jump off the moving average, mark up the highs, mark up that low. You got to get in early in that move. Again, as I mentioned earlier, think about that pullback area here. It's not just a straight pullback. It's a failure. Usually it is. It's a failure into pullback combination off of that low area, right? Off that low. Okay? Now, what happens though is what if we don't get to it till up here? Right? What if you don't get to it until up there? There are two scenarios I want to kind of bring your attention to here as we go higher. Let's say, for example, we get the 1, 2, 3 breakout. We get the pullback, but then we find ourselves way up top inside that round number, up around the top of that range here. There are two scenarios. One scenario will be a range. Okay, if they hold a range, that'll be proof that these buyers are holding enough so we can come in now and use a 1, 2 failure and buy underneath that range. Okay, just like this one back here, right? 1, 2, buy below that range. Same idea. Okay? Now, if we don't, if we do get that 1, 2, 3 and we end up top here, I'm also now looking for that short back down to that low. If we go sideways, that's confirming the bulls have it, right? But if we don't go sideways and if we pull back right away, look for that lower high, mark up that high, and what is it? A crown reversal. You got it, crown reversal. That might be the best trade tomorrow that we get. Okay, it may not happen until later in the morning, so be aware. Right? You'll get that initial move up in Asia, in London. It might spend some time chopping around up there, but watch as those buyers try once. They can't retest the high. They go lower low. They try again. Trap high now. Back down into that range again. Okay, those are two scenarios to watch for as we go lower. The same thing is true to the downside. If we go 1, 2, 3, you got to get to it early. You can probably get that sell. That'll be a reliable sell if you get to it early. Okay? But right after that move down, though, you're now at the low of that big range. And so now it's going to be, do we go sideways, confirming the bears have it, 1 try, 2 try, back down, or do we make that run lower and then crown reversal, 1 try for the bears, Again, I'm going through this relatively quickly here right now. 1 try for the bears, 2 try for the bears, trap low and reversal as we go. So the most important thing though is you want to get to those breakouts early. Because if you get to them late, if you're caught trying to, if you get into, if you're waiting until the very end of those moves, right, you'll be the one left standing when the music stops tomorrow morning. So do not buy high, do not sell low, and keep in mind, guys, like I always remind you guys, we are going over all the details right now relatively quickly. I know this video isn't an hour long here right now, but we're going through this stuff together, and we're going to do it together tomorrow in our trade room. I want to see you there with me to get registered as a brand new client and come trade the strategy with me tomorrow morning at the opening bell. I'll put all the registration links in the description of the YouTube video. So if you're on YouTube, grab the description, grab that link, get registered, and I'll see you tomorrow morning at the opening bell. It's going to be a great day tomorrow. Now, if you're not on YouTube, if you're on the blog right now at sidewaysmarkets.com, I'll put a big button right below the video tonight. So grab the big blue button that says join the trade room. Okay, use that to register for tomorrow morning's trade room. All right, so either use the YouTube channel or use the blog or go to the website at schooloftrade.com and get registered as an advanced member. You can learn all about membership right on the homepage of our website. Grab the advanced course, get ready for tomorrow morning, and I'll see you at the opening bell. And don't forget, if membership is not a good fit for you right now, at least take me up on that free pass. Grab your free course. It's all included in that free trial. You'll learn a whole lot more about the who, what, where, when, why. Everybody loves that free trial. You'll grab it there right to the left of my ugly mug. And don't forget, if you have any questions here tonight, I'm always here. You got toll-free phone number. I got live support. Please don't be a stranger. I've covered a lot in this video. I would love to share more with you. Call, email, use the chat box, or use the comment section below. And while you're down there, hit that thumbs up button for me. Guys and gals, great job today. Big day coming tomorrow. I will see you guys tomorrow morning at the opening bell. If not, come back and see me next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.